the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares rose as investors continue to mull US President Donald Trump's tariff threats to trading partners from around the world. Now, the Straits Times Index was up 0.55% at 4,154 points at about 2:45 p.m. Singapore time, and that is with a value turnover of some 882 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI closed in the green, up 0.71% at 4,161 points. In terms of value turnover, we are looking at 1.44 billion Sing dollars. Gainers outnumbered losers 358 versus 198. Top advances for today, we've got for you DBS, Jardine Cycle and Carriage, and UOI. And top decliners, we have here Abundante, GMHUSD, and ASUS. Well, in terms of companies to watch, we have the embattled entertainment player MM2 Asia, because the group is seeking to delay a 54 million Sing dollar bond repayment by 6 years till the end of December 2031. Now, elsewhere from Taiwan, semiconductor manufacturing company TSMC posting a better than expected 61% jump in profit for the June quarter, to China pledging to rein in irrational competition in its electric vehicle sector. We've got more corporate and international headlines in focus. Plus, the ongoing saga between US President Donald Trump and Federal Reserve Chair Jerome Powell. Now, lots prepared for you, and joining me on the line is David Chow, Director of Azure Capital. David, welcome back to the show.
Hi, Tian. Hi, everyone.
And David, let's start with global markets this time around. I mean, a Bloomberg report out earlier suggested that US President Donald Trump, he was likely to fire Fed Chair Jerome Powell. Now, the news soon sparked a drop in stocks and the US dollar, a rise in treasury yields. But Trump has since denied the news, which sent markets backed up. Wall Street closed in the green. Really, how would you read into the series of developments then?
Flip-flop again by Trump. I believe this is going to prompt the market to label Trump as being a taco yet again, and possibly inject a new layer of uncertainty into the independence of the Federal Reserve. This week, even as we saw the June core CPI numbers, coming in slightly below expectations at 0.2% versus estimation of 0.3%, we do see a bit of signs that tariffs are starting to feed into prices, particularly in goods directly affected. And this suggests actually more visible inflationary impact in the coming months could possibly come as tariffs begin to take shape. And this kind of complicates the case for further Fed cuts. Market have since scaled back expectations for 2 cuts this year. And this is probably one of the reasons, which prompted Trump to revive talks of replacing Powell, who has simply, refused to bow down. And, in a way, you can also say it's Trump's way of testing the market to see whether he can fire, Powell or not. So for this, a move by Trump to oust him from his current role will be quite dramatic. Again, I would need to emphasize there are various legal barriers to this move, and I think according to the Federal Reserve Act, which says the president can remove the Fed chairman only for costs, whether Powell's handling of renovation to the Federal Reserve Board's Washington headquarters rises to the occasion, of course, can really be subjected to legal challenge. And I think earlier on in the May ruling on Trump's firing of 2 officers and 2 other independent federal agencies, the Supreme Court has also, come in to try to differentiate, the Fed's role from those agencies, and even stating that the Fed is in a unique, structure, I think quasi-private entity. So it's not that easy. And then if you look at Powell's remaining tenure as the Fed chair, only 10 months, but I think the economic cost from firing him will be quite huge. It will be concentrated just ahead of next year's midterm elections. And according to that logic, firing Powell now, whether the attempt succeeds or not, will be really a self-inflicted wound for Trump, and makes little tactical sense.
Okay. Now, in the meantime, David, Trump also said he would send Letters again to more than 150 countries outlining what tolls they'll face. And he later told the Real America's Voice broadcast that the rate would be probably 10 or 15%, even though officials have yet to decide on the figure. How have Asian investors then reacted to the news?
I think if you ask me whether I see a definitive moment of a tariff closure with this possible emergence of a blanket tariff or 10 to 15%, I would like to say yes, but it's hard to get a conviction because we know how unpredictable Trump can be. Who is to say he will not change his mind and imposes higher tariffs to certain countries or industries, even if there's a signed agreement in place, in the form of these so-called letters. So looking at the closing of the Asian markets for today, I think these concerns have been thrown far, far away. European markets have opened higher, and I believe the U.S. futures now are still mildly positive as we speak. So let's see whether there will be more concluding evidence on whether a blanket tariff will indeed be implemented. Even if there is none eventually, we have, I think the investors have come to know that the global average tariff rate will still be higher than before. But this is something which investors have already priced in.
Okay. Now, if we go back to the Singapore stock market as usual, David, how did the STI fare today? And any surprises when we look at the biggest movers, MM2, after it sought to delay this 54 million Sing dollar bond repayment by 6 years? I believe the last I checked, the shares were down as much as 28%.
Yeah. So at the STI first, again, it's a good day for our local index at hitting a new high of 4,160 points. And with this, I think it's up around 22% since the start of April, which is liberalization day. So I think another 2% or so gains from this level, and we will hit the that 4,250 level, which I mentioned last week. So let's see when this level is reached, whether we will, or rather I will need to revise this index forecast or not. So MM2, unfortunately, among the top losers list today, MM2, which many of us are familiar with due to its productions, have resided, at the top. So, when a delay of bond payments occur, it's usually bad news for the company's equity listing, as it signals, financial distress. And in this case, it's continual financial distress for MM2. The green shoots, if I can, call that a green shoot, is the agreement to extend the maturing of the bonds by 6 years. I guess this could be the best solutions among all for now, and this comes at a cost, of course, with the coupon rates being revised to 6% from the current 5%. So we have to see whether MM2 is able to find any white knight which may just come in to help to revive the business. So let's wait and see.
Okay. And if we zoom in on some of the other companies to watch, David, we've got hotel and property group Amara Holdings. Amara announced today that it will be officially delisted from the main board of SGX as at 9 a.m. on the 21st of July, which is on Monday, I believe. Any thoughts so far?
I think with this, it actually marks the end of a privatization process initiated earlier this year, and this move follows the successful privatization offer by DRC Investments, I think which is basically a consortium led by a property developer Hua Hong, with I think participation from Wing Thai subsidiary Win Team Investment and the Albertsons Capital alongside the controlling Teo family. I think if I recall, I think this offer was announced in April this year. I think priced at around 89.5 cents, and which value Amara at around 514 million. I think acceptance level was as high as 98% or so, and this actually prompted DRC Investment to really exercise their rights to compulsory acquire the remaining shares. So again, this delisting will reflect a broader trend of privatization on the exchange. I think with at least about 10 to 15 companies receiving such offers this year, and again driven by low trading liquidity and undervalued stock prices, which the authority is trying to revive right now. And if we zoom in on Amara specifically, I think I recall saying that early in the year, I think its liquidity level was so low that an average trading day will just see a trading of about 21,000 shares around that area, and the free float has also fell below 10%, which trigger I think a trading suspension in June this year. So as such, with an offer that provide provided shareholders with a premium of 27%, over the last traded price or so, and I think roughly about 33% over the NAV value as of December last year. I think most investors, were right to cash out.
Okay.
So with this, we got to see what are the new listings coming on, and again we await the decision by the authority for the 5 billion program.
Okay. Now, if you're just tuning in, we're now in conversation with David Chow, Director at Asia Capital. Well, David, across the region, Tokyo, earlier it was down. I believe it ended in the green, though. Now, 7-Eleven owner 7&I Holdings, at one point it plunged more than 9% because Canada's alimentation Couche-Tard withdrew its $47 billion USD offer for the firm. Now, alimentation Couche-Tard also released a letter sent to 7&I's board accusing it of a calculated campaign of obfuscation and delay. What do you make of the latest comments, given how it closes a months-long saga? Was it within investors' expectations?
Okay, when I see ACT's withdrawal of this offer to acquire 7&I Holdings, this really marks the end of a prolonged and contentious acquisition attempt. That could have been the largest foreign takeover of a Japanese company. And by accusing the Japanese retailer for that sort of engagement behavior, I think it really signals a build-up of frustration, with the lack of constructive engagement during the whole negotiation process. So I think this statement suggests that ACT really believes 7&I sort of deliberately stopped, duty and discussions, potentially to avoid the takeover. And a deep dive into it will also point to a potential breakdown in trust between two parties. And ACT actually highlighted that even after signing a non-disclosure agreement, the duty process was quite limited. With tightly constrained management meetings. So it seems like every step of the negotiation there will be some problems residing. So regarding investors' expectation, I think this withdrawal shouldn't come across as surprising, as reflected in markets' reactions and commentary. I think yes, 7&I still fell. I think 10+% in Tokyo for trading following the announcements, indicating that investors were still somewhat disappointed. But this also suggested that the market had not really fully priced in a successful deal, because I think a successful deal pricing would actually be 30. Anything upwards of 30%, on average. So with all what has been transpired, let's see what management of 7&I still have up their sleeves in boosting shareholders' value.
Okay. Now, in the meantime, David, it seems like we're always talking about TSMC because it's a Thursday. The last time I believe is also about TSMC, some numbers ahead of the actual figures. Now we've got the actual figures. Taiwan Semiconductor manufacturing company reporting there a better than expected 61% jump in profit for the June quarter, bolstering confidence in the momentum of global AI spending spree. How far were the numbers in line with your expectations, and how far does this ease investors' concerns about the sector? Because just yesterday, chip equipment maker ASML said it cannot confirm if the firm will see growth in 2026 at this stage.
Yeah, so last week, when TSMC reported, I recall snippets of their performance. I think we got wind that revenue actually rose better than anticipated, 39%. And with this latest release, net profit was up a whopping 60+, percent year-on-year, and this has significantly exceeded market expectations as well as mine. For me, I had only forecasted 370 billion new Taiwan dollar, and the market was 376 billion, I believe. So this performance aligns with my expectation of TSMC still benefiting from robust AI-driven demand, as I had previously anticipated strong growth due to its dominant position in advanced chip manufacturing for clients like Nvidia, Apple, and Broadcom. And this profit growth was driven by still high, 57.8, gross profit margin, beating my estimates of about 55, and it really reflected TSMC's ability to capitalize on high demand of AI chips, which are expected to double in revenue contribution for 2025 as a whole. And regarding investors' concerns following yesterday's ASML's announcement, I think this set of TSMC results, will sort of act as hopefully a significant reassurance, because ASML is after all a key supplier of equipment to TSMC. So while these fears, still still raises fear about potential slowdowns in the semicon sector. I see that, this is really balanced out by TSMC. So I guess, with these two contrasting views, we have to wait for more players in the whole entire semicon value chain to report, and then we will see which side has a stronger, I would say, has a stronger stance in terms of the financial numbers.
Okay. Now, finally, before we let you go, David, we must also talk about this as well. I think it's called involution or 内卷, right? If I'm not wrong.
Yes, 内卷.
Yeah. Basically, irrational competition driving prices down in China. And to this end, China has pledged to rein in irrational competition in its EV sector, electric vehicle sector, reflecting authorities' increasing urgency to tackle deflationary price wars threatening your economic and industrial growth. How far has the news boosted shares of Chinese EV makers, though?
I think Hong Kong and mainland Chinese stock markets, I think they saw gains initially, partially driven by this announcement. But alas, Hong Kong market actually closed flattish at the close, but onshore China markets actually closed higher. So it's good to see the government's commitment to address overcapacity and price war, which has really led to margins, tightening to a decade low of, close to 5% net profit margin. So this move appears to have, reassured investors that some measures, will prevent, a race to the bottom. I believe the extent of this announcement will vary across companies, with leading players like BYD and Li Auto possibly seeing stronger gains due to their market dominance and robust delivery figures. But I think overall the market's reaction will still suggest a bit of a cautious optimism. But to be honest, long-term stability will have to depend on the specifics of this China's intervention, which remains unclear as of now. So I think investors will still adopt a wait-and-see approach.
Okay, lots to watch as usual. Thanks so much for the insights as always, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us right here on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.